let's actually talk about what is overtrading. It's essentially taking a trade which does not meet your rules or reasons for entry. Basically, taking a trade which you know you shouldn't be taking. And I used to do this a lot, and hoping I can share with you here what I've gone through to hopefully speed up your journey and, make it a lot easier for you too. So now I really take like 1 to 3 trades per week. And those of you in Sam's Effect Society, go to my journal, scroll to the top, and you'll see that I used to take so many trades per week, sometimes like 10 per week. And one of them would win and all the others would be like partial losses, big losses. There was just so much going on. But now, like I said, I literally take 1 to 3 trades per week maximum. So overtrading, it could look something like this. You could take a few trades in the morning and both happen to be losers. They were maybe good trades, you stuck to your rules, but they were losers. So you're now down 2% for the day. And for some reason, you've given yourself some daily target of, I want to make 1% every single day. So now you're looking for a trade which barely meets your rules because you need to hit your 1% a day target rather than just follow my trading plan. So you find another trade which is not very good setup at all, barely meets your rules, and now you're down 3%. Now, little side note, one of the things with this is that occasionally you'll take this extra trade which doesn't meet your rules, and occasionally it will win. Occasionally it will work. And that's almost annoying because your brain doesn't get the strong message that this is bad and this is wrong, because occasionally it pulls through, you get that little dopamine spike, and it reinforces it in your brain that, oh, actually, I remember that time it worked. So that's one of the downsides. You need to just get used to sticking to your plan. That is the plan, is to stick to your plan. If you don't do that, then you've failed. Anyway, I'll give you another example. Let's say on Monday, you take a trade, it's good, it wins. Then like 2 or 3 days go past and you don't find any setups meeting your rules. So then on like Thursday or Friday, just for the sake of it, you just take a trade which doesn't even meet your rules and ends up being a loser. You end up being break even for the week. So you can sort of see now, like some of my most profitable weeks, like a good week for me is take 1 trade, it's a winner. Job done. That I'd be happy with that. Some good weeks is when I take 2 or 3 and they're all winners. That doesn't happen super often. But these are all examples, in my opinion, of what overtrading actually is. So for me, an example of a good trade would be this. Prices come into the zone, not just on the edge, it's come deeply into the zone, it's rejected. The zone's an extreme zone where prices spiked in the past, and that's it. Now the output is very different to the input. On this, talking about overtrading, we're just focusing on the input. We're focusing on following the rules, getting the setup right. And whatever happens after that is whatever happens after that. But you're following your plan. An example of a bad trade would be something like this, where price has barely got to the zone. The zone's not even that good. You're just searching for some sort of zone somewhere to find a trade. And price is barely even rejected. So next, we're going to talk about what causes overtrading. So one of the main things is a lack of solid trading plan. For example, you might not even have trading rules written down on a notepad or on like an Excel sheet or wherever you track your trades. You should be tracking your trades and you should have clear trading rules. That's usually the most common, especially in beginners. They just go in, they've seen something on YouTube once, and they just try and copy it. You need trading rules and you need to follow them. That's it. And the outcome is the outcome. And then you go back to your trading rules 20 trades later and you see which ones tend to work, which ones don't. And it's a slow, long process. And that's part of the reason why I think so many people are not even profitable, because how many of you actually do this properly and treat it like a job? How many of you turn up every single day, collect data properly, and then analyze that data, in a month, 2 months' time? The next cause of overtrading can just be basic FOMO. For example, like we spoke about earlier, if you haven't taken a trade in a few days, you just feel like, you just keep sitting down to the charts and nothing's happening. You feel like you're not working, you're not earning money. I mean, a lot of the time you are earning money by simply doing nothing because you're avoiding losing, right? And a lot of the time you're just earning money by sitting in your hands. Another one is revenge trading. Like we spoke about earlier, perhaps you take a few trades, you're on a loss. You have like a daily, weekly, monthly target, which you have to hit. So you're just chasing it and chasing it and chasing it. And if it's not part of your plan, then you shouldn't be doing it. 2 more reasons are overconfidence. So typically, if you're on a bit of a win streak, you then start to think, oh, I can't lose. And then you just start taking random trades because you think this idea looks okay, but you've got no data to back it up. Again, back to your trading plan. And the last one is behavioral bias. So a lot of the time, for example, if you're hedging, you're in sell positions and you keep getting hedged. Okay. So behavioral bias is when you're in, maybe you're locked in several hedged sell positions. So you're constantly looking for a reason to short, when really, if none of those positions were there and you were just watching the chart, you would never be looking to short. So you got to try and, a behavioral bias is a big one, where you're looking for certain opportunities to meet your rules, whereas there's someone else out there which is looking at the chart completely differently and they might be right. So what are some of the effects of overtrading? And then after that, I'm going to tell you how not to do it. So one of the main ones is it just makes your losses bigger. This can happen because it can become a bit of a spiral, and your emotions are high and you just keep chasing the trade and exponentially increasing your loss. Remember that each trade you take is completely random. It has nothing to do with the next trade. It has nothing to do with the previous trade. Maybe if you're hedging, obviously, and you're all in one chart, that's different. But each chart, each trade, each position, completely random. Another effect is emotional stress and burnout. Now, when I was hedging for a couple months, I would say I had this. I was hedging for a couple months. I made like a cool 40-50% account growth in like a month or a month and a half, and it was going really well. But it was so stressful in terms of like every minute I needed to be watching where price was. Is it time to like change all my positions? It was hectic. I now have a set and forget approach where the growth is much more like 2 to 3 to 4 to 5% per month, which is great. Even when I was hedging and I sort of made that 50% growth in like, 50 days, whatever it was, very quickly I lost most of it and I was back at break even on the account because of just the structure of hedging and what it is. It's like a high win rate, but when you lose, you're going to lose, a good chunk. So from now on, I'd rather see like a slow, gradual account growth rather than this like big sort of emotional roller coaster. That's not what you want. You want to be calm, rock up to the charts, do the same thing every day. So now we know what it is, the causes, the effects. How can you not overtrade? How can you not lose 10K per month? So number one, we've said this a bit, is develop a clear trading plan. It's all about the input, what you do, not necessarily the output. Develop a clear trading plan, stick to it. Get 20, 30, 40, 50 trades of data, look back at it all and see which rule seems to work often and which doesn't. And you can just track your winners, your losers, work out your win rate, work out the average winner, work out the maximum risk to reward you could have got on every trade, see what is the most profitable outcome for everything that you've done. And that means that at the start, the trading plan doesn't necessarily need to be profitable, it just needs to be consistent. If you're not consistent every day, then you come back in 2 months and there's no data to track or to improve. How are you meant to improve if every day was random and you just went on your gut feeling? I'm not saying gut feeling is wrong, but in the early process, you need a trading plan, stick to it, collect data, analyze data, improve the trading plan, repeat. So yeah, practice the habit of just turning up, doing the same thing every day. And, by the way, most people just starting out, if you just open up trade positions, and as long as you're not like trading around news and you're not like cross-correlating, like going against US dollar loads at the same time or something. If you just open positions and typically leave your stop loss and take profit alone, and you keep that consistent all the time, you'll be pretty close to break even just from the get-go. And then it's just about analyzing, when to take these better positions. Another good one to potentially do if you're struggling with overtrading is to just set trade limits. Look at your most profitable weeks and see how many trades you took. Quite often it might just be 2 or 3 trades, 2 were winners, 1 was a loser. In which case, give yourself a trade limit of like 3 or 4 trades in a week. There's nothing wrong with that. It's going to make you really think about, do I really want to take this trade, or is there a better opportunity likely to come up soon? Another one is mindfulness and discipline. So you need to be in like a ready to go calm state when you approach the charts. A way that I personally like to do this, and it might not work for you, is that I like to wake up most mornings, not check my phone, grab a drink, go outside for a few minutes, just go straight to the charts. I find that before I've had time to like look at anything and stimulate my brain by anything else, I'm quite calm when I get to the charts because I still haven't like 100% woken up or done anything yet. And lastly, another way to not overtrade is education and training. Like if you surround yourself with a like-minded group of people who are successful and what you would like to be like, then for sure you're going to start picking up their habits, asking their questions. I think sort of community training is great, and understanding it. All the information is out there for free, so you can go and have a good look and see what you can find, see what resonates with you. And then the second part is, just community. And if you are interested, I run Sam's Effect Society, where I call out my trades every day. We've got a few verified profitable traders who call their trades out every day. And, they've had some good weeks. I might even start copying their trades soon, to be honest. And it's cool. There's a bunch of people in there. And you can join completely for free for 7 days. So the link's in the description. So at the end of the video, the conclusion is that experience helps a lot. Once you start to get this gut feeling of like, I know what overtrading is for me, like when I do it, this feeling I get when I know I shouldn't have taken that trade, didn't line up right. Perhaps if I take like 6, 7 trades in a week, I'm going to question myself, like, really, were there that many good setups? Because it's not very common that ever happens to me anymore. Now I'm profitable. So you need to know what a good week is for you in terms of trade volume, and that's just the way you approach the charts, perhaps your headspace, trying to repeat that every week. Do not give yourself like daily, weekly, even monthly targets. Like I say that I make around 4 to 5% a month. That's not really a target. It just tends to be what happens. I'm not aiming for that. Of course, if I was making a target, I'd love to make like 10% a month. but it just tends to be that this is what I do. But my target, and yours should be too, is to just stick to the trade plans, follow the input, do the input right every day, analyze the data, see what's working, see what's not, and then change the input if you need to. So I hope you found this video useful, and I'll see you in the next one. Cheers.